All right, let's talk about one of the most dramatic stories in finance right now. We're going to dig into the incredible tale of how a digital asset, one that spent years walking a regulatory tightrope, suddenly found itself right in the heart of traditional finance. Yep, we're talking about XRP and the wave of regulated products that are completely changing the game.
So you have to ask, right? How on earth did this happen? How did an asset that was once considered kind of niche, just for crypto specialists, suddenly end up rubbing shoulders with the giants of Wall Street? And how did it happen so fast? That's the big question we're going to unpack here.
To really get how massive this shift is, just look at the difference between then and now. It's night and day. For years, any talk about XRP was all about regulatory uncertainty. That created huge barriers for any big money to come in. But today, we're talking about products listed on the NASDAQ. It's becoming a staple for institutional portfolios. The entire conversation has flipped on its head.
What's truly mind-boggling is the speed of it all. This wasn't some slow, gradual acceptance. Nope, it was an absolute explosion of financial products, all hitting the market in 2025. It really felt like an unstoppable wave.
So the fuse was lit back in April with a leveraged product, kind of just testing the waters. Then just a couple of months later in June, Canada made a huge move with the first ever spot ETF. But the real earthquake, that hit in September. The REX/Osprey ETF launched in the US and just absolutely shattered volume records from day one. By November, it was a full-on flood, with giants like Franklin Templeton and Bitwise all jumping in. The entire landscape was redrawn in just a few months.
Okay, so with this explosion of products, investors suddenly have this whole menu of options. But it's super important to understand that not all these XRP ETFs are the same. Not at all. Each one is built differently for a totally different purpose. First up, you've got the crown jewel, the spot ETF. This is the real turning point, the true game changer. Why? Because it's the purest way to invest. The fund physically goes out, buys, and holds actual XRP. That means the ETF's value is directly tied to the real price of the asset. For big institutions, that direct, regulated ownership was the green light they had been waiting for.
Then you have these things called leveraged ETFs. Now these are a completely different beast, built for short-term traders. Their goal is to pump up XRP's daily price moves, usually by 2 times. That sounds amazing if the price is going your way, right? You could double your gains. But you have to be careful, because if it goes down, you're doubling your losses too. It's a much, much riskier tool.
And finally, you start getting into these more sophisticated strategies, like income ETFs. This is where the fund doesn't just buy and hold XRP, it also sells options against its holdings to create a steady stream of income. The very fact that products this complex even exist is a huge signal that the XRP market is really starting to grow up.
So you know what happens when you get this many different products and big-name players all fighting for the same investors, right? It's inevitable. You get a war, a full-blown price war. Every single asset manager wanted a piece of the pie, and they started competing like crazy on fees.
And it's fascinating to see how each contender played their hand. You had REX/Osprey, who used their first-mover advantage to just suck in all that initial volume. Then a giant like Franklin Templeton wades in, aiming to be the low-cost leader with a super aggressive 0.19% fee. And then others, like Amplify, are charging higher fees, but they're justifying it with more complex strategies. But you know who the real winner is in all this? The investor. You get more choices and better prices.
Okay, so the products launched, the firms started fighting over fees, but here's the billion-dollar question. Did the big institutional money actually show up? Was the demand real? Well, the answer was a loud, resounding yes.
Just look at this number, $37.7 million. That was the trading volume for the REX/Osprey ETF on its very first day. And this wasn't just a, good debut. It was the single best launch for any ETF in all of 2025. Institutional demand wasn't just knocking at the door, it kicked the door clean off its hinges.
And that flood of cash didn't stop. Oh no. A little while after launching in November, just 2 funds from Bitwise and Canary pulled in over $422 million combined. Just let that sink in. Almost $500 million of new money pouring into this space in just a matter of days.
But for me, this right here, this is the most telling sign that something fundamental has changed. There was this really volatile week in November. The market was panicking, and over $1.7 billion fled from Bitcoin and Ethereum ETFs. But while that was happening, get this, XRP ETFs saw inflows of nearly $180 million. That's the paradigm shift. It suggests that some big investors are now seeing XRP not just as another crypto, but maybe as a tool for diversification, a sort of safe haven when the rest of the crypto market is in a downturn.
So when you put all these pieces together, what does it all mean? It means we're watching XRP finally become a conventional financial asset. A long, long chapter of legal doubts and uncertainty is closing for good, and a brand new one is just beginning.
And this new era of legitimacy, it's built on some seriously solid pillars. We're not talking about something traded on obscure websites anymore. This is on the NYSE and the NASDAQ. It's not managed by some unknown group, it's handled by financial giants like Franklin Templeton. And crucially, it all operates inside a transparent, regulated system. Even the language has changed. The conversation has shifted from lawsuits to commissions and capital flows. You know, the everyday language of Wall Street.
It really all comes down to this simple, powerful idea. XRP has gone from being an asset in litigation to a conventional financial product. The entire narrative has done a complete 180-degree turn. It's like XRP finally graduated, with honors, into the financial big leagues.
And that leaves us with one final huge question. Now that the institutional doors have been blown wide open and the capital is pouring in, the debate is no longer about whether XRP is legitimate. That's settled. The real question, the one that matters now, is what is XRP's true role going to be in the future of finance? The game has completely changed.